Ladies and gentlemen, good day and welcome to Pokarna Limited Q2 and H1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Desa from CDR India. Thank you, and over to you, sir.
Thank you. Good day, everyone, and a warm welcome to Pokarna Limited's Q2 and H1 FY23 earnings conference call. We have with us today Mr. Gautam Chand Jain, Chairman and Managing Director, and Mr. Paras Kumar Jain, the Chief Executive Officer of Pokarna Engineered Stone Limited. I trust most of you have gone through the communication and the results mailed to you earlier. In the interest of time, we would like to commence with Q&A immediately, so I'd like to hand over to the moderator to open the floor for Q&A. Over to you, Rutuja.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav from Equirus Securities. Please go ahead.
Yeah, thank you for taking the question. Good morning to the Pokarna team. Sir, I wanted to understand on the demand side, particularly in the US market. So, as of now, the hard surface product demand seems to be resilient in the US market led by the home improvement theme. But how do you foresee this trend continuing going forward, particularly with new housing construction getting impacted because of the higher mortgage rates? That was my first question.
Yeah, you have any other follow-up question, Pranav?
Yes, sir. So the other question being, by when do you think that the resin prices will start correcting, which will help in your improvement in the EBITDA margin side?
Okay. See, coming to your first question on the demand scenario in the US in the light of inflationary pressure and the mortgage rates going up. See, basically, we are actively monitoring the environment. Inflationary pressures and the higher interest rates are definitely resulting in a psychological barriers for the building and building materials industry. While the current statistics of the hard surfaces which are coming from the US may not completely be reflective of the demand scenario for various reasons that people imported much more, considering that certain companies from India would be subjected to the duties and all that scenario. But I think definitely there is going to be a little slowdown in the demand scenario, especially in the new home construction. And to some extent even in the commercial. We believe that the remodeling will continue to be relatively better than these two segments. So that's the reason, if you look at our communication, we've said that we are looking at introducing some new designs which are at a higher price bracket and are relatively more resilient than the commodities which typically go into the specification and the commercial projects. So that's one way of looking at what we are trying to use as a tool to mitigate a certain amount of pressure coming from the demand side. Secondly, on the resin prices, the prices have started, especially since the resin is a key raw material, the resin prices have started coming down, and I think quarter-on-quarter basis, we think that quarter three prices would definitely be far better than quarter two prices what we had, because again the key raw materials like styrene, phthalic, maleic, and all other ingredients have typically cooled off a little. So I think over the next quarter or so, the resin prices should come to a reasonable level starting from this quarter onwards.
Sure, sir. And sir, my next question was on the imposition of anti-dumping duty investigation is going on. So any news that you have heard on that front for the rest of Indian companies?
Basically, as of now, Department of Commerce has given December 6th as the tentative date for announcement of the duties for the first period of review. Again, department has about 30 days possibility of extending it and taking it to all the way in second week of January. So if department does not decide, then probably second week of December things should be clear. If department decides to take extension, then all those companies which are impacted by this order will get to know about the department stand in second week of January 23.
Sure. Thank you very much.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors Limited. Please go ahead.
Thanks for the opportunity and considering the current scenario, very good performance. So congratulations for that. My first question is, as you have mentioned that from Q3 onwards we are launching some new design products. Is it fair to assume, let's say, that this new design products will have a better margin compared to the basic product which we were producing in Unit 2? And also with the resin prices coming down, let's say in next couple of quarters, can we come back to our margin levels which we used to do 2 quarters back?
So basically, exotic designs definitely have a relatively higher gross margin than compared to the basic products which we produce. That is definitely one thing. But then typically exotic designs also have a little gestation period by the time you stabilize them in the commercial production side of it. So we've already taken the order, started producing it, and we believe that through this quarter we'll be able to stabilize and start seeing that benefit probably by the end of this quarter or early next quarter. And as with any other product, if the key raw material prices come to a reasonable level, definitely it helps you to improve your margins overall. So that's what we believe.
And along with the resin prices, even the logistic cost will help.
Yeah, to some extent the import logistic cost will help, but then the local logistic cost with the diesel rates and all staying at a higher level may not really give that benefit. So we need to. Am I audible?
Yeah.
So that is one side of the thing. So I think the overall import logistic cost will definitely come down, and we are seeing that also. The sea freights coming down. That's something which we already started seeing.
Okay. And my second question is regarding. So can you mention about the utilization level at the Unit 2?
The Unit 2 utilization level during the quarter was very close to the optimum.
Okay, close to optimum. Okay. And with the, let's say, not very optimum product mix.
Yeah. So you have to keep in mind that, as I said at the beginning of this conference, first question, that demand scenario is a little muted now. So one has to consider overall factors while you start ramping up or introducing new design. So introducing new design is one of the key features which we have taken to actually offset the margin decline, which can happen either due to the muted demand or due to the raw material prices not down. So I think overall the situation is little on lower side, but I think that's what the global building material industry is saying now.
Okay. And my last question is on the domestic side, how much would be the sale for H1 and how it is performing?
See, domestic is definitely, as I always maintain, that is compared to our export exposure is minuscule.
Yeah.
But we are seeing quarter-on-quarter progress there. Right now we are in over 120 stores in India. The product can be seen and is on display properly. And now we are also expanding to other cities in India as well. But India journey is a little longer because we are at the top of the pyramid in terms of the attributes, aesthetics and pricing. So it's not going to be definitely like a commodity run, what you see on the tiles or other. quartz players in India.
Yeah. Can you mention the sales figure or?
I would let that pass by because it's not really a big number.
Okay, fine. That's it from my side. Thanks.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, hi, good morning. My question was on the revenue on the quartz business. So in the previous query, you mentioned that we are more or less at the optimum utilization in Unit 2. And if we see compared to Q1, that is the June quarter, our revenues are lower in September quarter. And if I understand it right, in June we were still not operating both the units at full capacity. So is it that Unit 2 we have seen improvement in utilization versus June and Q1 has slowed down, or is it that we have seen some significant correction in terms of realization?
It's a mix of both, basically. That if you recall, we've been maintaining that Unit 1 was having a price level in terms of realization lower than what we had in the other unit. So basically, the product mix typically drives the entire realization and the margin side of it. And then, as I said, that there is a little slowdown in the market as well. So both offtake and this together is responsible for a marginal decline, basically.
So both units would have, you mentioned that Unit 2 worked at optimum utilization. Even the Unit 1 would have worked at more or less optimum, or that was suboptimal?
No, Unit 1 is at the optimum level.
Basically, this quarter we have at optimal utilization.
Sorry, your voice is breaking.
I'm saying this quarter both the units have worked at optimal utilization.
Yeah, very close to optimum utilization for Unit 2, and Unit 1 is at the optimum.
Sure. Secondly, can you give us some sense? You mentioned that the raw material prices have come down, but if you can give us some sense, what is the type of correction you're seeing, like 10, 12% or 20%, that would be very helpful.
What come down? What has come down?
Raw material prices you mentioned has come down.
I said about key raw material, which is resin, not as raw material in general, because other raw materials typically continue to be still stronger. But resin is one of the key raw materials in the production. So we've seen a decline of about 15% happening in the prices, and we believe that another 10 to 15% is in store.
And how much typical resin would be of our total raw material cost?
It depends upon the formulation. It's a little proprietary, so I'll not be able to give you an exact number on the percentage because that clearly gives you the chemistry.
Sure, no problem. And how is our pricing formula with the buyers, in the sense, is it a pass-through, or when it goes up, it's an impact on our margins, and when it goes down, we are able to retain some benefits? How does we?
The raw material prices are not passed through, basically. So we have a fixed pricing mechanism largely. So whether it is a foreign exchange fluctuation to key raw material prices, there is relatively a lower cushion to actually go and negotiate. So that's something that's the reason you see that the overall EBITDA or the other margins got a little impacted because of inability to pass on this.
Sure. But if you see in the last 3 quarters, the currency has almost depreciated by 10%. So has that changed you that currency is normally not too much of a pass-through? So ideally that should have got reflected in terms of our margins and better realizations in at least local currency? Or is it that we have certain hedges and hence the benefit of the rupee depreciation will be visible in subsequent quarters?
See, what happens is typically we also have a borrowing in dollar. So if when you do a mark to market, basically, so that notional adjustment typically does not give you the complete benefit out of the rupee depreciating.
Okay, but I thought our borrowings are 400 crores and our exports are close to 800 crores, so we almost...
Yeah, but then you do a mark to mark on quarter basis, right? 800 is going to be on the annual year and 400 is constant all the time.
Okay, so which means in the next quarters, because now at the current levels the debt has already been marked to market, but we'll continue to see the benefit in terms of from Q3, Q4, because as we discussed that every quarter you'll see the benefit of this currency appreciation, isn't it?
The currency is something which I think both of us, if we comment, can be a sort of a crystal gazing. So whatever happens on the currency side, whether it is rupee appreciating or dollar appreciating, either way, I think that is something which I will be able to only comment once we are into the quarter and reporting.
No, that is well understood. I'm just saying if the rupee remains at the current levels, then in the last 2 quarters, the depreciation has been compensated by the correction on the loan that we are having. But in going forward, if rupee remains here, then we should see some benefit on the margins because of
if the constants are assumed as you propose, then
Yes.
yes, what you say is a high probability.
And the last question is on the debt reduction. We have seen some reduction in debt in H1. Can you give us some more sense on what type of capex we have for the full year and what type of debt reduction we are planning in second half?
Sir, as informed last time, because that annual repayment is 25 crores. Out of that, we paid actually 12 crores. But next 12 months, and actually the repayment liability is 35 crores.
Okay. And what is the full year capex guidance or plan that you are having in terms of the overall spend?
So right now we don't have a very large capex plan in terms of expansion. What we have is little just completing certain aspects of already work in progress which is there. So we'll not really have a very large capex coming in next 6 months.
Yeah, I think we spent something close to around 30 crores if I saw it right in H1.
That is work in progress capitalized.
Yeah.
So that was basically existing work in progress which got capitalized. So I think we can tell you what is the balance work in progress that can give.
Balance work in progress is
very little limited.
Okay. Got it.
Sorry to interrupt you, Mr. Sachin. May I request you to please rejoin the queue? We have
Sure.
participants waiting.
Thank you.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Yeah. Good morning. Thank you for the opportunity. The first question is related to the comment in PPT where we spoke about the correction in freight and that augurs well. So just wanted to understand, will that also flow through in our margins or that is largely borne by the clients, so not much of an impact?
So basically, see, this has been a double whammy if you look at for the trade. What has happened is when we, almost depending upon the route which the ship was operating, the last 3 months the prices have corrected anything between 30 to 60%. So the customer is sitting actually on an inventory which is on a freight side probably 60% more than what he can currently take it from India. So that is what is impacting them also because already the inventory which is sitting in them, they are already seeing a loss on sitting on that in terms of the shipping rate. So while the rate, the sea freight is typically on the export side a pass-through, on an import side it typically helps us because that is something which is our cost. So while it's completely passed through, but it also have other effect that customers typically are getting subject to a certain level of stress because of sudden fall in the shipping prices.
Yeah. Thank you for the reply. The second question is on the granite business. I know we generally used to comment that it's a fairly steady state business, but clearly the quarterly volatilities somehow do not seem to indicate the steady state business. So if you can give some highlight in the sense what's happening on the granite side that's impacting, creating so much volatility on the sales front.
The bigger volume in turnover comes from blocks, and China, which is the major buyer for the blocks, is in a bad shape even today. In fact, but worse than earlier it was. So there is no shipping happening, no sales happening to China, and no buyers are coming for additional markets. So till some situation improves in China, we are sitting on the stock inventory but unable to sell them because of the Chinese problems. We don't foresee any bigger turnover coming up from the slabs business, which basically happens with American market, because the demand for granite is day by day going down, and the whole market is moving towards quartz.
Okay. Thank you.
Thank you. The next question is from the line of Pratik Singhania from Sage One. Please go ahead.
Sir, I would. So my first question is with regards to this duty which is proposed to be implemented, say in the November end. So what kind of a scenario you paint, given speaking to your distributor, that once this anti-dumping or CVD, whatever, however you want to name it, gets implemented, then export from India to US, how it will get affected and how we stand to benefit or lose out of it?
Pratik, you have any other question, or this is the only question? I can probably answer all the questions together.
So in terms of cost of resins, you said that it is of 15%. So 15% is from the peak, or you would say 15% from the Q1 or Q2 average resin prices which you would have incurred? This is second question. Third question is with regard freight also, just similar to the 30 to 60% comment that you said. I wanted to know in comparison to the average freight cost that you would have incurred in, say, Q1 for our sales, Q1 or Q2, how much has been it further came down in as of now currently? So these three questions, sir.
Okay. So coming to your first question on the duty, as I said at the beginning, basically around December 6th or January 6th, depending upon what the U.S. Department of Commerce decides to take, would be the time when the duties would come out. In the scenario, see, there are basically, if you look at two scenarios, one is scenario that Commerce actually upholds what it already did it and does not want to change its position in the final. In that case, typically around 50 plus companies which are in that bracket would typically get impacted because their cash deposit rates would undergo a significant change, which typically a U.S. customer is supposed to deposit if to clear the goods. In that case, those companies typically, theoretically, will have challenge in shipping out because their rates can be anything between 323 to 162%. So that is one scenario. The other scenario is that out of all the 51, probably 50 come out because they are presenting their arguments to the DOC, and DOC says that one company is impacted and the other 50 are out of it. Then typically, more or less, the industry situation becomes normalized. So in that case, U.S. customers typically will not have significant challenge what they would have had all the 51 companies got into that trap. But then it also depends upon the fact that the order is limited probably to the 51 companies who are part of this review, and of course Pokarna is excluded from that review and we are not impacted by that. But then there are other Indian companies who are not impacted by this because they are under a different basket of all other exporters. So they may not get impacted by these duties and they may probably get a spillover of business from some of these companies who may be impacted by the order. So this is a very peculiar situation. I think only once the order is out, more comment can be made. This is how it could pan out to be. Now coming on to your cost of resin, yes, it is from the peak level we have seen a 15% decline. So as things stabilize, probably we can see a little more coming from there. Now coming to your third question on the freight cost, yeah, so there was a time when a ship to New York would have probably cost you anything about $10,000, $11,000 was also a time. Today probably at sub 6,000 and sometimes probably at 5,000 levels you are able to get a product shipped out to on the East Coast. The West Coast rates where we don't typically have a very larger shipments out have dramatically fallen. There was a time when we looked at a rate of 12,000, 14,000. Now the rate of 3,000 have come into place also in some locations. So that is how the freight costs have actually behaved, dramatically causing a little stress on the existing inventory and typically also on the new demand as well.
Okay. Sir, can you give me a trend about the resin prices consumed per kg for Q1, Q2 and currently so that we can get exactly shaping up?
Basically, as I told, I think to Sachin before this call, giving you an exact metric would be a challenge because it is part of our chemistry. So, but what I can tell you is that resin is a substantial component of our raw material prices. So any movement there would typically get reflected in the margins directly.
If you can, if not per kg, if you can say take Q1 as a base of 100, index it 100, and then if you can just guide us if 100 rupees was the base in Q1, then Q2 average would be how much, and currently it would be how much?
Typically, I'll rather give you a different scenario. I would say that at some point in time, we used to buy at 100. At some point in time, maybe in last 12 to 18 months, we started buying at 200. That was the fluctuation.
Okay. Okay. All right, sir. Thank you so much.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yeah, hi. Thanks for the opportunity. What would be the pricing differential between the premium design versus the basic design? Would it be 10%, 20% higher? And what sort of mix would we endeavor to achieve, say, over the next 2-3 years between the basic and premium? And what would this mix be currently in our both the units? Yeah, these will be my questions. Thank you.
The price difference can be as large as even 100% between an exotic design and a basic design for various reasons, because the cycle time, the chemistry getting involved, and the design aesthetics, and a list host of other facts. So that's how the differentiation is. So typically, overall, if the balance of 30% exotic, 40% basic range, and 40% medium range, 30% basic, if that equilibrium can be established, that's definitely a good scenario to be into. But then again, that is something which we cannot completely control because it's purely market driven.
Right. And what would this mix currently be at both our units?
In Unit 2, it would be typically that you have over 80-90% coming from the basics. In Unit 1, it would be typically about medium range and the basic products actually giving you about over 60%.
Okay, understood. So just by changing this mix, we can still achieve like a 15-20% growth on our revenue from a long-term perspective, right?
Yeah. So theoretically, it is possible that if we are able to establish a right equilibrium on the product mix, both the margin profile and the top line can be improved.
Understood. Okay, thank you. I'll come back in the queue.
Thanks.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Karthikeyan from Suresh Advisor. Please go ahead.
Yes, sir. Good morning. Just one question. You referred to additional shipments made from India in anticipation of these duties by the players. Rough sense, what would be the kind of inventory pile-up at the plus, of course, the higher freight cost-based inventory. So would you have some sense of the level of pile-up that could have happened?
It's actually a good question, Karthikeyan. We expect that anything between 3 to 6 months of inventory of certain designs in certain customers would have got piled up in anticipation.
Right. And what would be the extent of erosion, best case scenario, that has happened in your assessment? Would it be like 3-5%, or would it be a much bigger number?
What do you mean by erosion? Can you be a little more specific?
I'm saying when you talked about slowdown, I'm asking you, in terms of indicative offtake.
I think probably it will be in double digit is my sense.
Right. Double digits. Okay. Okay. Yeah, sure. Thank you so much. And best wishes.
Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, hi. Just one question was on the receivables. So despite the sales being lower than June quarter, if you see versus the March quarter, the receivables by have the 20 crores. So would you like to make any comments on that? Have you seen any increase in terms of, because of the softness that we are seeing in the market, is there any increase in terms of the credit that we have to offer to the clients?
If you look back historically, the shipping challenges was one of the reasons for the working capital to be tied up, because we had little shipments getting tied up at the port, and then the bill of lading not coming on time. So all that typically got bundled, and with little aggressiveness in the market approach, we will also have to extend some terms, of course. But all the terms what we extend to the trade in the U.S. market are largely backed by the underwriting from the Export Credit Guarantee Corporation of India. So we very judiciously offer that even the limits to the trade.
So that's perfectly fine. I'm asking about the cycle in terms of number of days. This seems to have increased. So that is
so with the demand getting muted, that is one reason where we have to be a little aggressive. Secondly, with the sort of some shipments delays which were still in vogue during the second quarter, the bill of ladings and all that did not come in time, and for us to get the payment from the suppliers, from the buyers, we need to present the bill of lading. So these are two factors which actually cause the receivable days to go relatively higher.
And with the shipping related challenges now becoming better, can we see some improvement in
that side of it? Yes, we'll have it. But depending upon the demand scenario, we'll have to still take some call from time to time.
Sure. And one question was on gross versus net debt. If I see the balance sheet that has been presented with results, we are sitting close to around 40 crores plus.
Not clear, Sachin. Can you be a little more audible or closer to
Sure.
the mic?
No, I'm saying if we see the balance sheet that has been presented with the results, the cash and equivalent is close to 40 crores plus. So, are we comfortable with keeping such high level of cash and bank balances, or would we look to, while our scheduled repayment is not much, would we look in terms of maybe prepaying some bit of loan and hence having a lower gross debt?
Maybe actually that there's a balances on actually as on date, because due to the realizations of the last 2-3 days of the month, then automatically we're going to use the balances in the next month.
Okay, fine. Thank you.
Thank you.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Yes, sir. Just one follow-up question. I understand probably the challenging demand environment, but just wanted to understand, even if the end market is probably not growing or probably slightly shrinking, but considering probably the duty on probably the other peers, and if this inventory pile probably dissipates over the next 3-6 months, has it anyway allowed us to improve our market share?
Basically, we've looked at two aspects of this duty. One is definitely we are trying to approach the trade where we feel that we can add value to their portfolio by presenting our design and probably take some additional market share which otherwise would not have been available because of various other reasons. So while that has not completely panned out fully yet because the duties are not completely final yet. So I think once the duty imposition happens, which way it goes typically we give a guidance, because it is not so easy in this trade to simply shift the supply chain that okay, today we'll buy from X, tomorrow we can go to Y. So before that decision of from X to Y is taken by the trade, it takes some time because the way the product is marketed, the way the products are shown in the US marketplace, there's a lot of activity. So it's just changing a supplier is not the end of the day because you have to change the sampling across. Suppose you are at 5,000 locations. So it means that 5,000 different locations, the samples have to be changed. So anybody wanting to take that call typically will wait for some time to get more clarity which way the wind is going to flow. So I think in a nutshell, to answer your question, we've not completely seen the benefit of spillover from the duty yet.
Got it. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yes, sir. Have the distributors or our clients started to see offtake at the end consumer level also slow down? Or is it that they are trying to reduce their inventory in anticipation of expected sort of a slowdown in consumer demand?
So we have seen a mixed reaction from the trade channel, which we have said. There are some people who have not experienced the slowdown yet. There are some who have done reduction in anticipation that already the inflation challenges or the demand challenges are going to pan out. And then there are some who are actually seeing. So depending upon what segment they are largely exposed to is what typically is giving them that direction.
Sure. And most of the commentary that we're hearing from consumer companies is that the upper and the mid-upper segment is where the demand is still relatively stable, and it is the value and the little lower end segment which we are experiencing softness. So have we also experienced that? And secondly, in terms of geography, US is relatively doing better than Europe. So are you also seeing the similar trends?
Yeah. So basically, typically depending upon the income level and the investment level, the impact of inflation typically pans out in that velocity. So our experience has been that usually at a higher income level strata, the inflation does not really impact much. And specifically also on the custom housing at a very different level of pricing, they don't really get impacted because the overall component of quads in the housing will be relatively lower than what otherwise the building materials would have got into it. So that is answering to your question that yes, of course, at the commercial project level, at multifamily housing, which are relatively low priced and very sensitive to inflation, they typically get impacted much than the others. Is what is our personal experience so far. Now, what was the second question?
In terms of geography, is Europe little more soft than US?
No, I don't think so, because the situation out right now, both in the Western world, whether it is Europe or America, the situation I think has become more cautious now. So whether it is a knee-jerk reaction to what is heard in the news or seen in the newspaper or what is a perception one has built, but I think slowdown is consensus is largely there in the building material category.
And just to your previous comment that in general you're also witnessing that demand is relatively better and stable in the higher end. Can you give us some sense? Is it that what is the sort of mix we are? Are we very? It's like a balanced mix between the commercial and the lower end and higher end, or is it that we are more tilted towards the higher end and exotic designs? If you could, if not specific number, just some ballpark sense how are we positioned in that?
We don't have a right number, because what happens is that our consumers, different distributors and the trade partners in US have a different level of exposure to the market segment. There are some customers who are very heavily dependent on new home building and commercial specifications, and then there are some customers who are largely into remodeling at a higher end of it. But I think overall, probably the balance is in favor of the low end and commercial specification market.
Sure. And any?
Mr. Kasera, may we request you to please
join
the queue? Thank you. The next question is from the line of Vikram from the Investment Advisors. Please go ahead.
Hi, sir. Sir, is it possible for you to share the breakup of operating margin in our old plant and new quartz plant?
Typically, I think we've always maintained that data is a little proprietary and will not be able to give a breakup between the two units. Consolidated numbers are there in the presentation.
And sir, and if possible, you can share margin of a premium product and margin in basic product?
See, as I told in a little while before, that the realizations can differ even 100% between a basic and at a gross margin level, because of various factors, whether it is a cycle time to aesthetics to chemistry and a host of other products. But then overall, what is the contribution of that particular product is also equally relevant for it to impact the gross margin significantly.
Okay. And sir, one question on who are the major quartz exporting countries to the US?
Yeah, so basically Spain is one along with us. Then we have Vietnam is also there. Then you have Israel, and then you have some parts of Europe, like I said, mentioned Spain. Then is some coming from Belgium, some coming from Italy. Then of course our Southeast Asian neighbors like Philippines, Malaysia, and Taiwan. Taiwan I already mentioned to you, and Thailand as well.
So these European players are facing any kind of energy crisis issues?
I think what we have heard is definitely energy is a big challenge for all the European producers. But I really do not know how they have been able to mitigate and to what extent they are impacted. But whatever here and say, what I can tell you is that yes, we have heard that energy is a big crisis for the European manufacturers of building material, whether it is ceramic to quartz or anything in between.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for closing comments.
On behalf of Pokarna, I thank everyone who's participated in the call, and I look forward to talking to you again in our Q3 call. Thank you so much. Take care.
Thank you. On behalf of Pokarna Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.